Good morning! Let's dive into this week's analysis. We're going to cut through all the market noise and really focus on the signals that I think truly matter for our long-term strategy.
All right, before we jump in, just the usual disclaimer. This is for informational purposes only. It is not investment advice. It's really just me pulling back the curtain on my own analytical process.
So here's what we've got on tap. We'll kick things off with a quick portfolio update. Then we'll dive into 3 key themes I've been watching closely. And we'll finish up by really decoding a fantastic example of corporate execution.
All right, first up, the portfolio. Amidst all the ups and downs this week, the most important update I have for you is, well, one of inaction. And that really signals confidence in where we stand right now.
That's right, no changes were made this week. We're staying disciplined, keeping our eyes on the long-term fundamentals, not the day-to-day market chatter. Look, the market got spooked by some headlines, but the real data, the stuff that actually matters, that's going to come out during earnings season. So until then, we're holding steady. Okay, let's get into our first major theme, and this is a big one. It's the absolutely unquenchable accelerating demand for AI compute power. We've got to separate the signal from the noise here. So this number, 2026, this really jumped out at me this week. What is it? It's the year that Microsoft thinks it will still be struggling to get enough AI compute. I mean, just let that sink in for a second. We're talking about a company spending over $100 billion on CapEx, and even they expect to be chasing supply for years to come. That is just a staggering forecast. And believe me, this isn't just a Microsoft thing. It's everywhere you look. All the big cloud players are telling the same story. You've got Amazon Web Services jacking up prices for GPU rentals because they're just that scarce. And then there's Google. They just processed 1 quadrillion tokens. To put that in perspective, that's more than double the 450 trillion they were talking about back in May. The demand is it's relentless. And that really brings us to the key takeaway, which this quote just nails. You have the biggest, smartest operators on the planet, and they are consistently underestimating how massive this demand wave is. I mean, for more than a decade now, they've set their spending budgets only to watch demand just blow right past their most optimistic projections. And AI? Well, AI has basically just poured gasoline on that fire. What that tells me is we're looking at a sustained, multi-year runway for growth for those key companies at the foundation of the AI stack. Now, what's interesting is this whole theme of intense, long-term supply problems, it's not just happening in AI. We're seeing a very similar and very powerful dynamic playing out right now in the aerospace industry. Take a look at this number, over 5,000. That's how many commercial jets are sitting in a backlog right now, waiting to be delivered. You see, the pandemic really forced suppliers to shrink, and that created these production bottlenecks that are still causing problems today. And what does that mean? It means a huge structural tailwind for the aftermarket services, the maintenance and repair that GE absolutely dominates. Because, well, older planes have to fly longer. And just to be clear, this is not some short-term blip. The industry data makes that painfully obvious. I mean, look at this timeline. The backlog is actually forecast to get worse through 2026. The absolute best-case scenario for things getting back to normal, 2031. But realistically, we're probably looking at 2034 before supply and demand are back in balance. This is a tailwind that's set to last for a decade, maybe even longer. And here's where it gets really interesting for GE. This slide just perfectly lays out the competitive dynamic. GE's main competitor, Pratt & Whitney, is having all sorts of problems with their engines. We're talking over 600 planes grounded because of it. Now, GE's production is already maxed out. They're fully booked, but this whole situation lets them scoop up a little extra market share and really profit from their rivals' mistakes, all in a market where everyone is desperate for supply. That is a very powerful place to be.
Okay, so we've gone from a massive industry trend to a company-specific one. Let's zoom in even further. Our third theme really gets down to a micro-level example that proves out one of my core beliefs, the incredible power of a sticky software ecosystem.
So I was looking at a customer migration recently that just perfectly shows how Intuit is climbing the ladder into bigger markets. Here's the story. You've got this mid-sized company, they're running on SAP, and they need better automation, something with AI. But here's the kicker. They didn't just bolt on a new tool. No, they ripped out their entire core accounting system and moved everything over to Intuit's QuickBooks Enterprise. That's a massive deal. It means their most critical financial workflows are now completely embedded in the QuickBooks platform. And you don't have to take my word for it. The client themselves said it best. This is a direct quote. There are certain services QuickBooks provides that if the company wasn't paying for, I would pay for out of my own pocket. Wow. I mean, think about that. When your product is so essential that an employee would pay for it themselves, you're not just a vendor anymore. The cost of switching isn't just about money at that point. It's operational, it's personal, and that creates a competitive moat that is just incredibly durable. All right, for our final section, let's tie all of these themes together. We're going to look at a company that really is the archetype for everything we've been talking about. Long-term vision, powerful competitive moats, and just relentless execution. And that company is, of course, Nvidia.
You really can't understand Nvidia without first understanding its founder, Jensen Huang. The man's entire philosophy seems to be forged in resilience and an incredible long-term vision. He is famously hands-on. We're talking over 60 direct reports, which is almost unheard of. He keeps him plugged into every single detail. And, most importantly, he saw the shift coming from gaming to AI years before almost anyone else. He didn't just enter a market, he basically created the one he now dominates.
And this quote, it might sound a little jarring at first, but it just perfectly captures his whole mindset. He genuinely believes that struggle, that pain and suffering, is an absolute prerequisite for achieving anything great. And that philosophy, it runs through the veins of the entire company.
And you can see that philosophy baked right into the company's organizational chart, or lack thereof. See, instead of a typical corporate pyramid with all its layers of management that just slow things down, Nvidia operates more like a flat network. Those 60-plus direct reports mean that information flows directly and freely to the top. It allows them to make decisions that are fast and accountable. It's a structure that is absolutely built for speed, not for bureaucracy.
And at the heart of it all is something you could call a whiteboard culture. It sounds simple, but it's profound. It's the practice of explaining complex ideas by actually drawing them out. Why? Because it forces a kind of clarity and a depth of understanding that you just can't fake with a polished PowerPoint deck. The thinking is straightforward. If you can't explain it on a whiteboard, you don't really get it.
So what does all this mean for us as investors? Well, these cultural quirks translate directly into some incredibly powerful interlocking competitive advantages. First, you have their full-stack approach. They integrate the silicon, the systems, and the software. That creates a performance edge that is very tough to beat. Then you have CUDA, their software ecosystem. That's the platform developers use, and it creates this massive moat through developer lock-in. And finally, you have the company's DNA. This is a company that survived near-death experiences, and that has coded a sense of resilience into its very being that you just can't copy.
So when you boil it all down, here's the takeaway. Nvidia is Jensen, and Jensen is Nvidia. The company's entire operating system, its culture, its speed, its vision, it's all a direct extension of the founder. The two are just completely intertwined.
And that, of course, leaves us with the big, critical, long-term question that we have to constantly ask ourselves. How durable is all of this? When the founder is the operating system of the company, well, what happens when he's no longer there? That's the billion-dollar question we're going to have to grapple with for years to come.